Hey traders, welcome to another global macro update. So unfortunately, I'm not going to be able to make the video for Friday. So we're going to be coming at you on Thursday night for this upcoming trading day on Friday. So let's discuss first what happened in the equities market in the United States using the SPX. First, we can see very aggressive push to the downside. We had a gap down opening the day. If we're looking at the daily. So that's where our previous candle close was, and then we had a move to the downside, and then that entire day was just a huge sell-off, breaking minor levels of resistance right here. Should be a potential level of support. Did not validate it at all, as well as this level of support right here, previous resistance, new level of support. That just got blown through the water as well. So the next major level of significance on the chart is currently the previous all-time high at around 3,400. We can see that right around there. We can see very significant level of resistance. We had a hard time breaking above it. Once we broke above it, we had a strong impulse push to the upside. Yes, this is a very aggressive corrective move, but look what happened right here, right? The 61.8. So if we're looking back at the previous kind of continuation to the upside, we have to understand during this phase right here, we not only had the kind of uncertainty of COVID. Obviously, we still have that right now, but this was way worse when obviously the world was kind of peaking in terms of uncertainty, fear. A lot of countries were just seeing massive explosions, like Italy, Mexico, United States was seeing a lot, but there was a lot of fear and uncertainty, as well as the social unrest with the whole Black Lives Matter movement. So even in those circumstances, we saw a previous support turn into a new level of resistance, and we actually broke through it. And once we broke through it, we had a very strong impulsive push to the upside. So let's just quickly take this snip here, take a picture, and we have a good understanding of what we're looking at. We saw a strong impulsive push to the upside. Let's make this a little bit bigger, make that thick. So this is our impulsive push. We had a pullback. We created a series of lower highs. We had a squeeze contracting the price towards an apex where we got a series of higher lows and we get a series of lower highs. You're going to get a contraction within the price, and then once you get that contraction, the expansion phase was this huge run up right there. So in terms of what we're seeing right now, in my opinion, unless we're breaking 3,400, it's a similar situation to this. There's not really anything, in my opinion, in terms of the fundamentals that would shift the market to the downside. This is a breath in the market. It has to happen. You're not going to have a market go straight up without having some pullbacks, and the $3,400 level zone is going to be that key level of demand for the SPX, which is, in my opinion, kind of a guide for the overall risk on asset basket. Try saying that sometimes. That we are looking at. So that's going to be the first thing to consider. Quickly, going to be looking at the NASDAQ here. Let's go to the daily chart. And we do see this previous series of highs right here. Potentially new level of support and confluence with this zone as well. So we can see that the NASDAQ is holding a key level of confluence where you have not only this validated zone, 1, 2, 3 rejections, and then you also have this other support zone, which is creating additional levels of support, and you also have horizontal levels of support as well. So for the NASDAQ, around the 11.4, 11.5K zone is the key level of support that we're looking to see, and it hasn't really broken it. This could just be the higher low for the next leg up. So definitely overall has not really broken market trend or market structure of any significance. It's still just creating the higher low. Very normal for market to pull back to this level of, previous level of high, new level of support. Very normal. Now, one thing to note, we do see volatility picking up, but remember this was back in kind of the summer. We talked about, let's just quickly go to this chart here, right here. Remember we were hesitating to break to the upside, and once we had that sell-off, validating the previous resistance as a new level of support, that was this move right here back in June. We can see around June, middle of June is when we had that move to the upside in the volatility, which was a downside in the SPX. So it does look like we are getting something like that right now. We got stuffed at these highs here, so if we're looking kind of like that, we can make it extended a little bit more. Initially, I thought this zone was going to hold right there, previous support, but I guess if you look at a 2-day, that's a little bit better. So what we might get is a little bit more volatility, but this 37 zone for the VIX is going to be a key zone that we want to see the price hold below for the VIX at least. So it's going to be something like this, and we're just going to make that red. So we're going to be looking to see the VIX hold this level, or hold this high ideally. That would be the perfect situation, and then we'll just start to see something along the lines of this, where we get a big spike, and then we're just going to get a nice die down where we see that previous high get validated one more time, and you're going to see that drawn out consolidation, something like this. So that is ideally what we would like to see, is a nice drawn out consolidation that just slowly moves to the downside and fades away, like we saw a pump here, and then you see this nice fade. This is a great risk on time where overall, equity indexes, equities, you see crypto probably doing well in that same kind of environment as well. So we're going to be looking out for that. So ideally, we don't want to see the VIX absolutely, massively pumped to the upside, but these pullbacks do provide really good opportunities. So that's overall what we're going to be looking for right now. And we're going to get into VT, which is the world index. So that's the overall risk on assets. Let's quickly take a look at the US dollar before we jump into any of the crypto or anything. So let's go to DXY. And then quickly look at what currencies are doing well, just to have an overall analysis of risk on or risk off. So let's go to the weekly chart and discuss what we're seeing here. The 92 level for the US dollar index is very significant. We do see that's a key level of support. Could extend it a little bit beyond, but we're really near the boundaries of this being a level of support. If we start to see a move to the downside, the next key level is going to be around 88, or let's say 80. I'd say 88 is a fair number for the next level of support. So if we do get another failure, like we saw right here, a failure to hold a support, if this is another failure to hold this level of support, we could see the next impulse push of the US dollar move to the downside. Now, this would mean there's a high probability if the US dollar moves to the downside, we're going to see a similar situation. Gold, silver, crypto are going to be doing very well. We're going to see the US stock market do very well, and other risk-on currencies do well. Japanese dollar, not so well. US dollar, really poorly. And that's going to be the environment that we're in. So let's now look at the smaller time frame to discuss if this is actually going to break. So the main level of support, the main level of resistance that I currently see within the structure is around 93. We do see it is forming some level of a series of lower highs and lower lows. I definitely do not trust this, because what we could see is just consolidation, and then another dump to the downside, holding a series of lower lows. You get a major lower low breaking the trend line. You get a validation of the previous support, new level of resistance, and then you get another capitulation, melt down. So we definitely don't want to jump in too early, but theoretically, if you're looking at this in a point where the US dollar is going to be moving to the upside, this is a low, this is a lower low. If it does move something like this, where you get a hold of a lower low, or hold of a low, and then you don't see a lower low, and then you see a higher low, well, then you potentially may get a nice little bottom there, and you're looking for the lid on that bottom. You're looking for a validation of a new level of support of the previous resistance as a new level of support before you get the next impulsive push to the upside. So we will be really keeping a close eye on the US dollar. It's definitely too early to tell right now, but it's consolidating, it's doing its thing, and we're going to wait until there's a little bit better of a structure in order for us to be looking for an opportunity, because right now we still made a lower low, failing to really make even breaking that high right there. So overall, we're making lower lows and lower highs. The downtrend continues, the US dollar weakening continues, and this does make sense. Now, if we start to see the US equities market fall apart, we will probably see this make a higher high, maybe hold this as a new level of support. It may be quite aggressive, but we could get something like this, right, where this is going to be the major level of supply that we need to break before we get the next impulsive push above 94, in my personal opinion. So that's going to be what we're going to be looking for the DXY. We definitely don't see it just yet, but something to keep in mind if we start to see the U.S. equities market really take a tumble. This is going to be moving to the upside, and we have a good understanding of how to trade in that sort of market environment. All right, let's quickly look at the FX market just to have a good understanding. I'm going to get a little bit of water here. Okay, so this is on the daily chart. So let's just take a quick look at relative strength and weakness. We can see what is doing really well recently, kind of since the start of, let's say, July. GBP has been doing really well. We see AUD do really well. We also see the Euro do really well. We see CAD do really well. What's kind of a little bit of an outlier is Euro was more or less considered a risk-off currency, where it's a little bit more of a safe haven, but the Euro has actually been a risk-on currency and more speculative and stronger than the US dollar, even in these risk-on environment times. So kind of surprising. CAD's not been doing well. New Zealand's been picking up a little bit, and this is USD, which is the weakest by far out of really the entire list. So the US dollar has been extremely weak for a while, and if you're looking back all the way until March, it's been by far the weakest by quite a ways. And then the Australian dollar has been extremely well, 23% since March compared to the Japanese yen. That is unbelievable in terms of a currency pair. That's, yeah, pretty mind-boggling. But all right, that's going to be a quick look at the overall markets. Basically, we're looking to see if risk-on currencies or risk-off currencies are doing better. And obviously, we can tell by just looking at the chart, looking at different time frames, that risk-on currencies are definitely relatively stronger than risk-off. So now that we understand that, we're now going to get into the crypto market, because that's what we love most, just in terms of, if we could pick one market to be in, it'd be in crypto for sure. So let's now discuss this here. So this is the chart of BTC. Let's go to the weekly chart. Let's go to the very large time frames and really get a good understanding of what's happening here, because we did get a good understanding of what happened in the US equities market and stuff. Let's even go to BTC USD on Bitfinex, or Bitstamp has a really long chart as well. Let's go to log. Okay, so this is that breakout that we were talking about right here. We can go to the top there, draw our trend line, make it red, and then we also have our nice area of support right around here, like so. I'm just going to adjust that a tiny bit, like so. So this was the triangle that we were eyeing up for the next continuation pattern to the upside. Now, like always, we do want to make sure that we're going to get our structure to break as well as the price action. So we do see the price action has broke, this symmetrical triangle has broke, but if we are looking at the market structure on the monthly, this is the key level of resistance that we want to see the price break. Key level of support, resistance. Could move it up a little bit, like so. I think that's going to be the zone that we're going to be looking for. So overall, we do see a candle closure above this zone. We see the price trading above the, let's say, 11K zone for over a month, and then we see a pullback. So yes, we do see a pullback, and it could drop. Let's just look at some major zones that we're able to identify right here. Looking at the monthly chart, very well respected zone at around like 9.3. I would say that's all the zones I'm drawing for now. So we're going to be going now to the weekly chart. Alright, so that's going to be the major level, I think, of support that we're going to be looking at. So we'll just make that very light, like so. And let's now go on to the daily chart. Okay. So I think ideally what we're going to be looking for, let's just get the mouse right, is probably going to be some level of a descending zone. And I think we're going to be just looking to see if the price is able to, on a weekly chart, hold the series of higher lows. So we can see that this is a large symmetrical triangle breakout. We see the impulsive push right here. This is the pullback, the market breadth, and we're going to see if it's able to hold the previous higher lows, like level. So we need it to hold above, let's say, 9K or 88. Seems quite a bit from where we are, but if it starts to break below that zone, we're then going to break back into the triangle, which is, I think, going to be a big surprise for many. Would be a little bit of a surprise for me as well. So it's not completely out of the question. There is going to be a strong level of support all along here from around 9K to 10K. So there's going to be a lot of demand, but if it does start to trade kind of below 93, 94, that's going to be pretty worrying, because we could see this start trending and trade back and start contracting within the large symmetrical triangle again. So in the realm of possibilities, yes, you could argue that if you bend this descending zone a little bit, you probably could fudge it to validate 3 times. Like if you get this rejection, this rejection, this rejection, maybe if you get it on the monthly, you get candle closure, wick, wick, you know, depending on what time frame. But I think you got to be a little bit careful. But overall, my bias for the macro has not really changed too much. I still think that there's a very high probability that we have broken out, and this is going to be the higher low that we're going to be holding, and we're going to be looking for opportunities to continue the trend to the upside. So I'd say right now being a little bit patient is good. I was in some Ethereum and Link for alts, and they both got taken out, so I'm just going to be patiently waiting until BTC holds, because as long as BTC is falling, alts will not be looking great, in my personal opinion. I want to see BTC stabilize, and then once it starts picking up its trend, moving to the upside, carrying its momentum, and overall bullishness, then I will look at alts, because alts, in my opinion, are only going to be speculative tools that we use in order to trade. And yes, there are some alts that we use to invest, but it's a very small handful compared to the list of alts that we trade, speculate on, short-term price action, right? We're looking at 1 hour, 4 hour time frames. We're not looking to invest it for months and months and months. We're looking for a swing trade. So in terms of BTC, obviously it is an asset that we do invest in. So we do take different approaches depending on if you're talking about it from an investment standpoint or a trading standpoint. But we do only really look at it from a trading standpoint in these global macro updates and crypto market updates. So yeah, I would say looking at the, let's just get the price label. 95, it seems pretty far, but we're looking for that higher low. We do see a very key level of resistance at around 10.2, so that's going to be the first possible zone. I like to look for validation and then a breakout. I don't want to enter on the potential higher low when, you know, the price is absolutely dumping. To me, it just does not make sense. What I'd rather look for is once you see that validation and then the contraction, and then maybe you get a nice descending support there, then you get a descending wedge, and then you're looking for that next impulsive push to the upside once you've validated that there are buyers at this zone with a valid price action structure that has broken to the upside. It's not the first moment you see the price start to dump, you want to just put a limit order somewhere on the price. To me, that doesn't make sense. Just makes more sense to stay patient, wait for it to validate it. If it's going to go up, it's going to validate, right? It's not going to, it could theoretically just absolutely balloon from there, but, you know, during contractions, during these breakout phases, you're going to have periods of time where the market moves in waves and you're looking to capitalize on these pullbacks. And that's, in my opinion, what we're seeing right now. We had a very strong contraction in price action right now. We got a strong impulsive push. This is a contraction. We might get some volatility, contracting the volatility basically, reducing the amount of movement the price has, and then we might get our next impulsive push to the upside. So the overall direction from the macro perspective, in my view, is still to the upside, but we just need to practice a little bit more patience right now, because this is the pullback phase in the new market trend, which is still bullish in my view. On the 4-hour, we do see that the price has broken this major level of support right around there, right? So we do have to take that into consideration. But overall, like I said, there is going to be a lot of support right around here. The major level that I do want to see the price hold is around 95. It's pretty far away from where we are right now, 10.2. It's like 6%, but I do not want to be looking to short. Definitely. Personally, hedging and being short bias, is a little bit different. There's one thing protecting your overall portfolio, and then there's another thing to be actively looking for short plays to try to capture momentum to the downside. Excuse me. So on the 4-hour chart, ideally you're wanting to see something like this, where you see a somewhat of a pullback. You might get another dump to the downside, and then you see this low, this lower low, and this lower low, and then you can just draw a descending support zone, and then you see this high, this lower high, and you might get a lower high right here. So you might get a resistance, and this is the type of structure you're looking for, a descending zone. A descending zone is a resistance, and this is the midpoint, and this is going to be your large descending wedge formation for your next large continuation pattern that's going to break to the upside. That's going to be the ideal situation that you're looking for. Or you may get a faster recovery than you initially thought. So let's get another possible play out. Let's get something like this, and you get an ascending zone, and you get a break to the upside. You could be looking for a potential symmetrical zone like this. So then you're going to be looking for 1, 2, and that third validation somewhere along this zone, and then 1, 2, 3 validations of that support, creating a symmetrical triangle, which then you have edge trading to the upside, holding this around 10.4, 10.5k zone as a level of support, even though we broke this minor level of support right around there, because the major level on the weekly still shows that this is a key level of demand on the weekly and monthly chart. So don't want to count that out as a failed breakout just yet. This is still the strong impulsive push that broke the price out of a major level of resistance, and this could be the consolidation, and this could be the pullback consolidation before the next impulsive push to the upside. So we still got to keep an eye out. I think it's still in a play it's still possibly in a play. So we just have to keep out either for that or either for that. So that's going to be what we're going to be looking for BTC. That is in confluence with the overall equities market, because they do still see some positive correlations. And although BTC is increasing its positive correlation with gold, I do still see Bitcoin as somewhat of a risk-on asset that is used for speculation, to some degree, although the amount of people that are actually using it as a hedge against the currency proliferation that we're seeing globally is increasing, which is a positive as well. So just something to note. All right, let's quickly look at the total too now. This is going to be the total altcoin market cap. We do see it broke a major level. Let's just go to the weekly chart and log it. This major level is right around there. The 117-ish billion. Let's just move that up to 113. And this was the previous level of resistance, which turned into a new level, or previous level of support turned into a new level of resistance. And it was the bottom kind of consolidation for the bear market. And we've finally broken out of the high there, and we're just retesting and validating the previous zone of supply as a new zone of demand before continuing the overall momentum to the upside. So overall, things are really in confluence with not just the crypto market, but conducting the multi-asset analysis that we like to do. So I think this is a pullback that should be a potential continuation move to the upside. And then we do see the crypto market or BTC dominance just still further move to the downside. So we should be still looking at alts, in my opinion. Alts should be still something that we do look at. Although right now I think it makes more sense to be patient, just because I think a lot of alts are going to be melting to the downside, and we want to be a little bit safer than sorry, and we might not catch the very first impulse push that an alt or BTC creates, but there are always sympathy plays that we're able to capture in these crypto markets, which is also really nice, or to potentially capture. So we don't really see much bullishness from the BTC market cap, so that does indicate to me that the alts still are getting some buy volume from speculators, which is a positive thing. So around 61-62% in terms of BTC market cap is a level that we do not want to pass above. All right. So I think that's going to be the video for today. Thank you very much for watching. Didn't want to make it too long, but I think right now we really want to see the U.S. equity market hold its ground and hold its support zone, especially the SPX at around 3,400, 3,400. Right around there is a key level of demand that we really want to see the SPX hold in order for the overall risk on assets to hold as well. NASDAQ, we do see zones of confluence at around 10.6, 10.5. So in my opinion, I think they will hold, and the overall momentum will continue to the upside. We haven't seen any real fundamental news that are going to drive the market further down. This is just a market, breath. It happens. Sell-offs happen, and the market usually is going to take the elevator down and the staircase up. And we can see that right here. This is the staircase up and the elevator down. This is, in my opinion, a healthy pullback to validate key levels of supply as new levels of demand before further continuing to the upside. So thank you very much for watching. If you have any questions, drop them in the comment section below. If you found this video useful, educational, entertaining, it would be great if you give this video a thumbs up, and if you subscribe to our channel to show that we should keep on making more videos like this. So thank you for watching. Hopefully you had a great trading week, and hopefully you have a great and safe weekend. So until next time, have a good one, traders.